So we have to continue from here. So that is with respect to the selection of independent directors and maintenance of data bank of independent directors. So, as you are aware, like independent directors are must for an organization. So the Ministry of Corporate Affairs have initiated one data bank with respect to the independent directors. So the people, whoever want to become themselves as an independent director, they can straight away register in this MCA website, wherein the people are required to give their qualification, then their expertise, their experience, and any other skill set that they are having, and director identification number also. So all these details, if we are going to put, then we will be registered in the data bank, either whenever there are any vacancies with respect to the company's independent directors, then we can apply. So that is with respect to the independent directors data bank. So you can see in your first point, they have mentioned independent director are going to be selected from the data bank. So just now I said, no, data bank, in the data bank, all the names and addresses and the qualifications of the people, whoever are willing to act as an director, all that details are going to be registered. So it will be notified by the central government, and then any company, when they want to access any information with related to the independent directors, they can get an access from this data bank also. Then next is the appointment of independent directors. So yesterday also we have seen the same thing, independent directors and their appointment. So whenever the company is going to appoint any independent director, then at that time they have to call for a general meeting, and in that they have to approve whoever is going to be appointed as an independent director. And when they are going to take some particular person as an independent director, they have to give an explanatory statement also, like on what basis he is going to be selected as an independent director, and then they have to inform the notice of this general meeting, wherein they are going to start with the initiation of the process of appointment of the independent director. So that details also should be definitely given in the general meeting. And then again, the third point is with respect to the data bank. So the data bank is basically in an organization or which is being maintained by MCA, wherein all the details of the independent directors are going to be registered. And then when they are going to register themselves also, it should be according to the rules and regulations specified by the central government. And the next one, so whenever the central government want to bring in any modifications in the qualifications or in the requirements of these independent directors, they can propose that. And when the company is going to select any independent director also, it has to definitely follow the guidelines given by the central government. So these are the certain rulings which the central government has given when they are going to appoint the independent directors. This is for the class of the companies. If your company is falling in any of these criteria, what the company has to fulfill. So first thing is, if the public limited companies are there, wherein the share capital is up to 10 crores or more, then that company should have definitely at least two independent directors. So that is the first condition with respect to the public limited company, with respect to the paid up share capital. Now again, a public limited company only, wherein we are going to focus on the turnover. So if this company's turnover is more than 100 crores, then also it definitely should appoint one independent director. And next thing is, if the public limited company is going to have any outstanding loans or deposits or debentures which are exceeding 50 crores, then also in the company, definitely independent directors should be recruited. So these are the cases wherein the central government has made it compulsory that they have to appoint at least two independent directors. And when they are going to be appointed as an independent director, that director should possess the appropriate skills. They should be having the knowledge, expertise in the various fields. So some of the examples that they have given is the management, law, any other research, corporate governance. So basically, if that person is having more knowledge and more awareness, then he will be in a position to guide the company in a better manner. So that is why they have prescribed various qualifications for an independent director. So from time to time, whatever changes they want to bring in the qualification or the criteria of the independent director, everything will be placed on the data bank website. So which we can get it from the Ministry of Corporate Affairs, from the central government, that is given by the central government. Now next one, role of the independent directors. So what role we are assuming that they have to play. So first one is he should be independent in his judgment. So whenever he is taking any decision, it should be for the company's welfare as well as for the stakeholders' welfare only. He should not take anything for his personal profits. So that judgment he has to bring in. And the next one is he has to see to it that the performance of the board and the management is going to be in the objective of again the organization only. So the entire board and management has to work with the view of progress in the company. Next one is he has to check the performance of the management. So how the management is, whether it is achieving the goals and the objectives that the company has kept. So all that should be monitored. And then the independent director should also satisfy himself with the financial information that is available in the organization. He has to see to it that the transparency is being maintained, and then financial controls and the risk management system is also working well in the organization. And next, he has to take care of the interests of the stakeholders. And if there are any minority shareholders also in the organization, he has to keep in the interest of the minority shareholders in mind when he is taking the decisions. Next one is he has to bring in a balance in the conflicting interests of the shareholders. That means, as I said, he has to see to it that the stakeholders are also getting some benefit, and as well as the company is also getting the sufficient profits. So like that, he has to maintain the balance between the two. And then he has to determine how much remuneration should be paid to the key management personnel, to the executive directors, and the other people whoever are involved in the management. So that should be again appropriately given, and it should be as per the guidelines only. And then lastly, he has to see to it that there is no conflict that is arising between the management and the shareholder. Everything should be going on well, and there should be a proper balance between the two also. Now coming to the responsibilities. So what are responsibilities he has? First one is every time regularly he has to update his skills and his knowledge, and he has to know the company very well, so that any decision anytime in case of any contingencies or risks he has to take, he is going to take the utmost good decision. Then next, he has to get the proper clarification or information whenever it is necessary. If he is not satisfied with the internal people, he can get the services from the outside experts also, and that amount would be paid by the company. So any activity that he is indulging in, he has to see to it that is in the progress of the company. And then the independent director should be attending all the board meetings, and he has to see to it as a member of the board also, he is contributing from his side. Next, he has to participate in all the committees, whether he is going to be a member or the chairperson, whatever capacity he is going to act, he has to be a part and parcel of the company. And whenever there are any general meetings that are scheduled, then it is his responsibility that he has to attend the general meeting of the company. And when there are any concerns relating to the organization, that means any problems that the organization is going to face, then at that time, he has to utilize his independence, and he has to propose a proper action that need to be taken by the board. And then he has to see to it that the problems are going to be resolved also. If in case the problems are not going to be resolved, and still if they are pending, then he has to insist upon the board that the problems or the disputes that are arising within the company should be subsided. Next one is again he has to keep himself informed about the company as well as the external environment. So what is happening in the company and outside the company also, he should be having a knowledge. And then he should not indulge or he should not obstruct any functioning of the board. That means he should not uh, put any obstacles when the board is functioning. Next, he has to pay sufficient attention. So whenever it is any issue that is related to any related party transactions and all, he has to see to it that the payment is being made properly and all the things are as per the guidelines only. Next, he has to see how is the vigilance mechanism, whether if there are any frauds that are taking place, are we able to make out that fraud, and then can we report that fraud also? That system, is it there or not? He has to check. So whether the internal control systems are there, whether proper mechanism is there, whether the board is functioning to the utmost proper manner or not. So all these cases, all these things also he has to check. Then if any unethical behavior is being reported in the company, that also should be reported. And he has to act within his authority only. Beyond his capacity, he should not act. And always he has to see to it that he is going to protect the interests of the organization as well as the stakeholders also. And any information that is very much important for the organization, which is very much confidential, that should not be disclosed to any other parties. So trade secrets and all, he has to maintain within the organization only. So these are the responsibilities. Now, next, this is one. So, how far actually the independent directors are taking the responsibility in the recent times that has been given with respect to our country? So, they have highlighted certain cases. So, one thing is with respect to the Jet Airways. So, when there was a problem in the year 2017 and 18 with respect to the working of the Jet Airways, then at that time, many board of the directors have resigned from the organization. And many of them have stated the reason for the resignation is the time constraint. So that shows like the board of directors, even though they are functioning in the organization, when it comes to taking the responsibility, they are not accepting the responsibility. And in the case of problems with respect to the organization, they are running away. So this is one case. And then next one, next problem, similar kind of an incident has taken place with the infrastructure leasing and financing company also. So this company has defaulted in the payment of its obligations. So at that time also, when the company is not paying to these financial institutions or to the creditors, then also what the independent directors have done, they have stepped out. They have resigned from the organization instead of taking the charge and guiding the company in the right way. They have resigned. So the Ministry of Corporate Affairs have questioned when they know that there is a problem that is encountered with the organization. At the last moment, why are they resigning instead of showing the red flag, instead of objecting, like why the company is doing like this, what is happening in the organization, instead of bringing it to the notice in the general meetings and all, why are they taking these kinds of decisions in the last moment? That was also being questioned. And one more case that they have mentioned is with respect to the Tata company and with respect to Muslim Varia. So here also similar one, even though the independent director was there, he was also not taking the proper care, and then because of the problems, the independent directors are leaving the organizations. So we can see from these cases, either the independent directors are not taking the responsibility or the independent directors are not given the independence in certain cases. So that is the reason why these kinds of these kinds of issues are taking place in most of the countries. And this example is given with respect to our Indian scenario. Now moving ahead. Now coming to the role of auditors. So what role is being expected by the auditors and what all responsibilities they have? How should they should be? So now coming to the definition of audit. So definition of audit says audit is a systematic examination of the books of accounts. So what all books of accounts has been maintained by the organization. The Audit procedure is wherein the auditor is going to examine the transactions that has been recorded and see whether all the financial statements or the transactions are being listed out and they are maintaining the transparency, and then the financial disclosures are true and fair enough. So that is the procedure of audit. So the person whoever is going to scrutinize all this is called as the auditor. So auditing is basically the examination of the books of accounts, and for the books of accounts, when we have to check whether the transactions that has been recorded, whether that is correct or not, we take the help of the vouchers. So with the help of the vouchers, we are going to check the financial statements by an independent person, and that independent person who is checking all these books of accounts is called as an auditor. So these definitions you can just go through later on. Now coming to the role of auditor. So the role of auditor is basically he has to be there in the organization. He has to check all the financial statements, and as per his knowledge, as per his checking, if the financial statements are going to be present fair and if they are fairly presented in all the aspects, then he has to give his audit report. It has been given by auditing practices board, wherein what all need to be followed by the auditor, what all that has been given. So first thing, he check all the financial statements with the due care, and he has to check with respect to the proof only. So internal auditor. So basically the work of the internal auditor is what all accounts are being maintained by the organization, all that he has to check. He has to see whether all the financial statements are being recorded in accordance with the auditing and accounting principles. And if there are any discrepancies, that he has to inform it to the management. So that is the work of the internal auditor, and he will be appointed by the organization. The next one is external auditor. External auditor is the person who has been appointed so that he is going to check the financial statements of the organization. He is going to be an independent person, and he is not a part of the organization. He will not be a connected person with the organization. So the external auditor will come, he will check all the financial statements, he will check whether all the financial statements are exhibiting the true and fair view, and he will check with the help of the vouchers if all the financial statements are given in a proper manner without any misstatements or without any errors and frauds, then he is going to give the audit report. Then next one is government auditor. So the government auditors are the specialists in the tax and then in the regulations. So these government auditors will be appointed for the government companies. So whenever there are any government companies or the government entities, then at that time the government auditors will be appointed and they are going to check the financial statements of these companies. Then lastly, we are having the forensic auditor. So forensic auditor is an auditor who is going to be a specialist in the crimes. So crimes here in the sense is with respect to the financial statements. So whenever there is any frauds that are being happening in the financial statements, if there are any misappropriations or the errors, and then the organization is going to window dress the financial statements, and then if it is going to present, then forensic auditor is going to find out all these crimes that are going to happen with respect to the financial statements. So as per the forensic audits, the following are the various things that he is required to be. So first thing the forensic auditor has to check is whether any misappropriations of the funds or any money laundering is taking place in the organization. So if that is the case, he has to report it to the management. Then next one is in case of any um, loss of any insurance claim and how much insurance the company is going to claim and what is the actual loss. That quantification of the loss also will be checked by the auditor. And then next one is determination of the profit sharing of the business partners in cases of the dispute. So when there are any disputes and then we are not able to assess how much profits or should be shared between the partners, then also we can take the help of the forensic auditor, and as per the legal contracts, he is going to decide how much should be given to whom. And then lastly, it is for the determination of any claims of professional negligence. So with respect to the accountancy profession, if there are any negligence that is going to happen and because of which there are any frauds or errors that are taking place in the financial statements, that also will be found out by the forensic auditor. So this is the new methodology which has evolved in the recent times. Then next is American law governing auditors' responsibilities. So that is the next heading. Hmm. So the other day we have seen Sarbanes-Oxley Act. So that has been initiated by the US government because of the various frauds that are taking place in the corporate sector. So by the enactment of this SOS Act, the government initiated that whatever issues that are happening with respect to the financial statements, what all frauds are going to be taking place in the companies, that could be checked. So mainly they wanted to place a reliability on the financial statements and what all corporate disclosures need to be done from the side of the organizations. Even that also is being included in this SOS Act, and this is one of the most widely used act also. So what all significant things are covered under this? So first thing is this act has given a representation of the entire accounting industry, and because of the recommendation of this act only, they have set up one quasi-governmental organization which is called as Public Company Accounting Oversight Board. So in short, it is called as PCAOB. And this was mainly created so that whatever accounting frauds are being done in the various public limited companies, that could be stopped. So how the companies should be working, what all mandatory accounting standards and accounting procedures need to be followed by all these companies, and what all disclosures should be definitely being given by these public limited companies. All this has been given by this PCAOB, and it works with the Corporation of the Securities and Exchange Commission. So this is basically an institution which is going to work for all the public accounting firms, and what all disclosures, what all legislations need to be given by them, that also is being given by this SOS Act. One second. Then next one. So next point says, like in the SOS Act, there are various sections which are going to have a direct impact on the performance of the audit firms. So as I said, what all responsibilities should be taken by the audit firms when they are auditing in a public company. At the time, what all care or what all precautions need to be taken by these firms, and definitely what all disclosures should be there in respect with respect to the public limited companies, that also has been given. And because of this system, from the traditional bookkeeping system, we as there is a transformation of accounting information system, so how that is being implemented in the organizations, what all services are being provided, how the audits are taking place, all this information need to be disclosed. Mm. And then when, as per this act, whenever the audit firms are going to be engaged in the audit of the client, for every 5 years, they have to be uh, rotating the relationship. Often they need to be changed instead of having a long-term relationship. Then next, another inclusion from this SOS Act is when when it is with respect to the CEO and CFO, then they have to take the personal responsibility, because these are the people who are going to be at the higher level and going to manage the company. So the chief executive officer and the chief financial officer are going to be responsible for the acts, and always they have to carry their personal responsibility when they are maintaining the financial statements, and what all disclosures need to be done, that also should be checked by the financial officer. And then next one is with respect to the section 401. So that is with off-balance sheet transactions. So off-balance sheet transactions are basically the kind of transactions which are not any direct commitment to the company, but they will not be appearing in the balance sheet. Like there are certain items which will not be appearing in the balance sheet, but somehow they are related with our organization. So likewise, for example, if our company has given any guarantee to any other company, that they, in case of the default of that company, we are going to clear the debt of the company. So like that, when we are giving any commitments or when we are giving any guarantees, but then that guarantee or that commitment is going to be unutilized because that company has cleared its debt, cleared its debt. So our interference is not required. So when our interference itself is not required, then this item would not be appearing in the balance sheet also. So these are certain facts which will be not appearing in the balance sheet, but still they are having any material weightage on the organizations. So these kinds of, if any material off balance transactions are there, then what all disclosures need to be made, at least in your any notes or anything, that implications are also given. And next one says, like whenever it is with respect to the annual report. So in your annual report, when the company is going to issue, at the time, what all should be definitely checked and what all information should be compulsorily given. So first thing the disclosure is required is with the company's internal control structure. So how the company is basically controlling it internally, what all measures you are going to take so that there is a proper control on each and everything. And when you are implementing any such kind of a method or methodology, how far that internal control system is effective, that also we need to report. And then as I said, like whenever we are going to have any auditor that is going to be appointed, then that person is going to be there for 5 years. And after that, we are going to have a rotation of the auditor. So that is also being emphasized on from this act. And next one is section 409. So it deals with the disclosure requirements. So what all need to be disclosed in the organization, and if there are any material changes in the company. So material changes are any changes that is very important and that involves money. So if there are any such changes that are going to happen in the organization, whether we are going to disclose it in our financial statements or not, and are these financial statements complete? Are we giving the accurate or the complete financial information to our stakeholders? That also should be checked. And next one is lastly about with respect to the IPO. So whenever the companies are going to deal with any initial public offering, so whether they are any foreign companies or any non-public companies also, and when they are dealing with the securities. So when they are registered and when they are going to issue any IPOs or stock and these things are being traded in the stock exchange, then at that time, what all provisions need to be followed. So when the company is being listed in the stock exchange, whether you are following the guidelines, and if the company is going to go for the public offering, then also what all guidelines and what all compliances the company need to make with respect to this, that is also being discussed by this Sarbanes-Oxley Act. So these are the main highlights of this. Next is appointment and removal of auditors. So how one auditor can be appointed and how he is going to be removed, in what consequences the auditor is going to be removed. So from the sections 139 and 140 of the Companies Act, that has been dealing with the appointment, removal and resignation of the auditor. So, and section 142 deals with the aspect of remuneration that need to be given to the auditor. Okay. So these are the main points when it comes to the appointment of the auditor. So when the company is going to appoint any auditor, at the time the company can appoint him only for the one term of consecutive 5 years. 5 years. So if suppose if Mr. A is going to be appointed as an auditor of the company, he can be there continuously in the office for 5 years, and after 5 years, his term will be over. So that is one case. And if again, if we are going to appoint the same person for more than 5 years, then in what all cases, what is the implication and what is the case why we are going to reappoint him, that also should be given. And then with respect to the audit firm, so first one is with respect to an individual. So one person, we are going to appoint him as an auditor. And the second point says, if we are going to appoint any audit firm as an auditor for our company, then at that time again, we for more than for 2 terms for five applicable only when the auditor has completed his term as per the clause A as per this Companies Act, and again he shall not be eligible for the reappointment after the 5 years. So as I said, appointment will be applicable for 5 years mainly because the Act do not want any prolonged relationship between the company and the auditor, because if he is being associated with the company for more than 5 years, then probably he would be knowing all the loopholes of the company, and there would be a rapport between the management and the auditor also. So in that way, he might be indulged in any kinds of frauds. So that's why we are going to rotate the auditors for every term. After the term of the auditor is going to be over, we are focusing mainly on the appointment of any other person instead of having the same auditor repeated for so many years. Then next one, again, if we are going to appoint any audit firm, then in that case, the audit firm will not be again eligible for reappointment if at all it has completed same 5 years is over in the organization, then again we cannot go for the appointment of the same audit firm. And if they are having either the auditor or the audit firm is going to have any common partners, common relatives or common partners are there existing, then also we cannot have the same auditor or audit firm again appointed in our organization. We have to keep them rotating. Then next one. Next, coming to this powers and duties and responsibilities. So what all powers the auditor is going to have? So first thing is he can access all the books of accounts and all the vouchers at any time. Next, whatever information is required by the auditor, he can get the explanation from the officers of the company. Next is he can have an access to all the records of the company. So he can check all the financial transactions, all the financial statements can be checked by him, and then he can get an access. That is his right, because he has to give the audit report by the end of the financial year. And then next one is he has to make a report of the members of the company on the accounts examined by him. So that means what all he has checked in the organization, that report he has to give it to the board of directors. And then the auditor is having every right to attend the general meeting and know what is the progress of the company. So these are the powers of the auditor as well as certain rights also. Now duties. So what all the auditor has to compulsorily indulge in. So first thing is his duty is whether to check whether the company is being properly secured whenever it is taking any loans and advances at the time. Is it making the payments, and then is it having the proper security? Is the company maintaining the proper security with respect to the financial matters that need to be checked? And he has to check whether all the financial transactions are definitely being recorded in the books. And next one is if the company is not an investment company or it should not be any banking company, then at that time, whether all the company's assets, if the company is consisting of any shares, debentures, or any other securities, at the time, whether the company is selling them at the correct price or not, that also need to be checked. So if at all this company is going to sell at a lesser price, then that should be highlighted by the auditor. Next, he has to check with respect to the loans and advances. So he has to see whether whatever loans and advances has been taken by the company, are it being shown in the same manner or not, or if the loans and advances are being shown as a deposits, that he need to be carefully examine and see whether it is showing the transactions in the proper manner or not. And next, he has to check whatever personal expenses are being incurred in the organization, if they are going to be charged to the revenue account, that also he has to check with due diligence. And the last one is if the company is going to allot any shares for cash, the auditor has to check whether the company has received the entire cash or not. So that also need to be checked, because sometimes the company may record even though it has not received any cash, it may record it that it has received, or it may do the opposite of that also, so that it can give any misleading information to the stakeholders. So that's why all these items should be definitely checked by the auditor. The next is the responsibilities. So first thing that he has to do in the organization is he has to develop a familiarity with the organization. So he should be attending the general meetings, and then he should be familiar with the organization so that it becomes easy for him to audit the financial statements. Then next is he has to pre-plan the audit. He should be planning it before, so that he will be knowing what all steps or how or what strategy he has to take up, so that he is going to complete the audit within the time period, and if there are certain complexity areas, then that how should be checked. That also could be verified by the auditor. Then next, he has to give a proper estimation of the risks that are associated with the company. And next, he should be independent whenever he is going to take up the audit. He should not be influenced by anyone. And then he has to complete his audit timely and accurately also. And next, he has to conduct his audit in a professional manner. He should not be doing it for any personal benefit. Whatever is good for the organization and for the stakeholders, that he has to keep in his mind, and then he has to report it very fairly also. Next, always he has to carry a cooperative behavior with the staff. And next, he has to acquaint himself with the premises and the employees so that he can get the proper information. And then he should be knowing what all records need to be checked and what is the location of the records also. And in case he needs any extra information, he can request any files and then he can go through all of them. And then he has to return the records that he has asked. He has to maintain all the records, and he should not be removing any important documents from the company. After he is going to check, he has to keep them back in their place. And then he has to be responsible and accountable for the work he is doing. Next is he has to manage the audit in time. Within the time, he has to give the report also. He should give the audit findings and various recommendations also. And then he has to go through, he has to maintain all the worksheets so that whatever calculations or whatever important things are there, all that is being noted in the audit worksheets, as well as he has to maintain the audit notebooks also. Audit notebooks and audit working papers also should be maintained by the auditor, and in that all the conclusions should be properly given with the proper verification of the things. Next, from time to time, he has to conduct the audit review, and then he has to finalize his audit, and any work is there that is pending in the organization, that also he has to complete it, and proper follow-up of the work should be taken place so that the entire audit is being done in a proper manner. So all these are the responsibilities that one auditor is going to perform. And whenever it comes to either the powers or duties or responsibilities, as per the Companies Act, he has to work, and anything beyond his capacity, he should not be indulged in. He should be taking proper care in all these activities. The next is audit report. So this audit report will be given by the auditor after the checking of all the financial statements. So as per the Companies Act 2013, when the auditor is going to give his report, at that time, what all main things should be there in the audit report and what all should be considered are given. So first one is he has to check whether the provisions of the Companies Act are being followed by the company or not. Then whether the company is following all the accounting standards and auditing standards. Next is he has to check whether the matters with respect to the provisions of the Companies Act or any rules and regulations that are being included in the audit report or not need to be checked. And then next one is any matters that the central government has notified, he has to check in accordance with that. And when he is going to give his audit report, whatever is the best of his knowledge and based upon the information that is available in the organization, he has to exhibit in the audit report. And apart from that, he has to inform what is the profit or loss that is coming from the financial year and how are the cash flows for this particular year. That also need to be given as a part of disclosure. And apart from this, these are the various other things which need to be there in the audit report. So first thing is whether he has received the entire information related to the organization and all explanations are being there in the audit report or not, he has to check, and all such information with respect to the financial statements, whether there are the details of all the complete financial transactions. That should be mentioned in the audit report. Next, as per his opinion, whether the company is going to maintain the proper books of accounts or not. And did he examine all these books of accounts and are they updated? And if there are any branches, whether he has visited the branches and whether did he get the information from that or not, also need to be given in the audit report. Next, the other one is also similar point like the second one. So if at all the company is having any branch offices, then at that time, whether he is the person who has audited the branch office or not, that information also should be given. And next is with respect to the company's balance sheet and profit and loss account. So how much balances are being appearing in the financial statements? And next is whether the financial statements are complying with all the accounting standards or not. That information also should be disclosed. And next is any observations or any comments on the functioning of the company. And the next point says if at all any director is being disqualified because of certain aspects, if he has been disqualified, is the company reappointing him as the director? That fact also should be mentioned. And next is any qualifications or reservations that he is going to maintain in his audit report because of the maintenance of the accounts. And next is whether the company is going to follow adequate internal financial control system. So how the internal control system is working and whether it is effective or not, or any other matters which are important with respect to the organization, all that should be disclosed in the audit report. And some other important points that need to be disclosed additionally are whether the company has disclosed any pending litigations that are there with respect to the company. That is one fact. And next one is whether the company is maintaining adequate provision for any contingencies or any risks associated in the coming future, whether all those reserves or provisions are maintained or not. And lastly, whether there are any transfers with respect to the investor education and protection fund by the company. So if at all, if they are transferring any amount like that, how much amount has been transferred? All these points should be definitely there in the audit report. Then next one is special focus on reporting fraud. So in case of frauds that are taking place in the organization, then at that time, what all matters definitely should be reported in the audit report by the auditor. So in the audit report, the auditor has to disclose if he becomes aware of any fraud that has taken place. So first thing is when he is able to identify the fraud, he has to inform it to the board of directors and he has to inform it to the audit committee also. And the same observations he should report in the audit report. So within the 45 days, he has to do the reporting of audit report with respect to the frauds. And next is if he is able to identify these frauds like that, then the auditor in his report, he has to mention that in the company fraud is taking place. And if from the board of directors, the auditor is getting any reply, if the board of directors are going to respond or if the audit committee has given any response with respect to the fraud, then what all are the observations, what they have actually replied, that should be listed in the report. And the same thing should be given to the central government also. That information should be sent to the central government also. And next one is, second point says if he has received any reply from the board of directors. Now third one says if the board of directors or the audit committee are not responding, even though the auditor has informed that fraud is taking place in the organization, he has intimated them, but neither the board of directors nor the audit committee has responded within 45 days, then what the auditor has to do is he has to send the same information to the central government in the form of a note, wherein it is going to contain all the details of the fraud that has taken place, the communication that is taking place between the board of directors and the audit committee, and wherein from the side of the auditor, he has sent them the notice, but they did not respond. So that is what he has to give the information to the central government, and this report should be sent to the Secretary, Ministry of Corporate Affairs. He has to send it in a sealed cover, and he has to either send it by a registered post or by a speed post, and then he has to follow up it by an email also. Whether they have received or not, that also he has to simultaneously check. And this report should be sent on the letterhead of the auditor, wherein on the letterhead, the postal address of the auditor should be there, the email address and the contact number of the auditor should be there. And then when he is sending this also, he has to sign, he has to seal, and then he has to inform what is the auditor's membership number. So all these details should be there. And then this report, he is going to send it in the specified format of audit 4. So that is the form which we are going to use it. And lastly, all these provisions of this rule, whenever there is any fraud that is going to happen, so what is the provisions of this ruling, whether the auditor is going to follow all these things, that also should be mentioned in the audit report. The next one is with respect to the restricted scope of reporting on fraud. So basically, this is the responsibility of the auditor, that he has to identify the fraud and then he has to inform. But if at all, even though he has identified it and then he has sent it a notice, or if the fraud is being, either it is presently committed or it has been committed in the past, either by the company or by the officers or by the employees of the organization, and this fraud does not include the following. So whenever it is not the fraud by the company, and even though discovered by the auditor also, so that fraud is could be anything that is with respect to the present or past. So the auditor is going to identify the present or past fraud that has been committed by the company. So again, this will become the responsibility of the auditor only. So maybe when he is going through the financial statements for the present financial year, he has come up with the fraud that has taken place in the past, then also it is the responsibility of the auditor that he has to identify the past frauds also. And the other one is whenever fraud on the company by the external parties. So the company is the victim here. Basically, if some other external party is going to commit any fraud and that again comes to the knowledge of the auditor, then that fact also should be intimated by him. Next is signing of the audit report. So it is the duty of the auditor that he has to sign. So whenever the auditor is going to check the financial statements, if he is the person who has certified all these things, then it becomes the duty of the auditor that he has to sign the audit report. He has to certify it as per the Companies Act 2013. So he has to sign, and then only the audit report will be valid. So in case if it is a limited liability partnership and wherein the company is going to appoint the partners as a chartered accountant, then also they are, instead of if the auditor of the company is only the partner, then also they are going to be authorized to sign on the behalf of the firm. And whatever are the qualifications or the observations or the comments from the financial transactions, all that need to be mentioned by the auditor. And when he is going to submit his report, he has to read all those things in front of the shareholders in the company general meeting, and then the report is going to be open for the inspection of any member of the company. So now next is, in case if it is going to be a manufacturing, mining or processing company, at the time, what all details should be included. So first thing that the auditor has to check is whether all the proper records are being maintained or not, whether all the fixed assets are there, whether they are managed by the organization with the reasonable intervals of time, that also should be checked. And then next one is with respect to the fixed assets. So whether all the fixed assets are there and whether the revaluation process has been applied or not, that also should be checked. Next is physical inspection of the finished goods, and then the assets should be checked. So what all assets are there, whether they have kept it in the form of a finished good or a spare part or the raw material, how much have been written in the books of accounts, whether they are physically present or not, that also need to be checked. Next one is with respect to the physical verification of the stock. So how much stock is there physically, and then how much stock is there in the books of accounts, that also need to be checked by the auditor. Next is any material discrepancies. That means the stock or the items are not getting tallied in your books of accounts. There is some transaction or there are certain values, but physically when we are verifying, there are other values. So that also need to be checked, any material discrepancies which is not matching or tallying. And then after they are examining all these stocks, if he is satisfied that whether all the books of accounts are being properly maintained and it is fair enough, then only he has to report the same fact. And if the company has taken any loans, whether it is in the form of a secured loan or unsecured loan, and if